this panel. My name is Samuel Borghese. Today, we're going to be talking about the future of climate finance, institutional investors, family offices, and the return of capital, return of investment debate. Now more than ever, following this inauguration, we're going to be seeing that climate is going to require climate tech and climate financing is going to require substantially more consideration as to how it can generate revenue and profit. We have an amazing set of panelists here today. I'm going to let them give introductions to themselves. Could we start off with August Fern?
Hi. I'll say good morning because it's morning where I am. I'm calling in from the Bay Area of Northern California. It's nice to see you guys today. My name is August Fern. I am a partner with Baruch Future Ventures. We are a family office that focuses on making early stage venture type investments in deep tech climate companies. Everything we look at has a climate impact, and we're involved with companies at a really early stage. And I'll jump to give you my answer. You could absolutely make a return and invest in the sector as well.
Fantastic. Melrose Wild.
Hey there, Melrose Wild. I operate Permaculture Capital. I also have another entity called Decision Society. We focus on raising capital and doing investor relations for companies and funds that are doing work to improve the human planet condition in some way. We tend to bucket in permaculture, healthcare, technology, and consumer. Permaculture, just think about anything that goes into or around your body, energy, food, water, building materials, clothing, textiles. And we have found quite a few mechanisms to de-risk the investing in things that matter, especially facing so many geopolitical and environmental issues here at home. So grateful to be here and excited to meet everybody.
Sure. And Dr. Maria Candida.
Good morning. I'm also from Brazil. For me, it's good morning. So good afternoon for everyone. First, I'd like to thank you, to say that it's a pleasure to be here and also to have the opportunity to talk about such an urgent topic. And thank you very much, especially to Dr. Verghese for the invitation. I'm a professor at the Federal Institute of Science and Technology in Brazil, and also to the Federal University of Brazil. And currently, I'm working as an advisor to the president. But I would like to say that my speech here represents a personal view on the subject. So thank you very much. I'm a specialist on energy transition. Thank you.
Thank you. Tarja Wickland.
Hello, everyone. Greetings from Finland. We have our own family office in New York, actually, and then we work with several financial institutions globally. So I'm very excited to be here and thank you for the invitation and looking forward to speaking on this important topic.
Appreciate it, Tarja. David Carlin.
Yeah, it's great to be here. I was the head of risk at the UN Environment Programme's Finance Initiative, working with companies around the world on measuring, managing their climate and nature-related risks and impacts. Now I work as an advisor to governments and the private sector on transformative strategies around the climate transition, as well as policy initiatives for them. So really excited to be here and talk about this at a time of great change.
Sure. And Amanda Kofod-Simonson.
Thank you so much. Pleasure to be here. I'm Amanda, and I'm a partner of our Copenhagen office in Copenhagen Changery. We are a consulting company, and we are helping private investors, pension funds, and larger capital funds in investing in equity. It can be balancing climate action, financial returns, navigating risk hedging, climate-focused investing, but it can also be the role of ESG in the implementation and integration phase, as well as strategic growth advisory. Thank you.
Wonderful. And since everybody introduced where they are, I am in Puerto Rico right now, near, I believe you, Dr. Maria. We do have a large panel, so if anyone says anything that speaks to you and you want to jump in, please raise your hand if it's not directly addressed. At Davos Worldwide, we like to focus on solutions. However, I do think it's important to identify some of the largest problems in the early panels. So I am curious what some people see as the largest problems, and we want a free-flowing conversation around that. So maybe August Fern, what do you see as some of the largest problems arising in climate science right now that climate finance could address?
Well, so I thought we were going to talk about climate finance. The problems in climate science are different than the problems in climate finance, right? There are a lot of challenges we have yet to work out. And they're very closely related to climate finance because everything comes down to it has to be economical. We could come up with all kinds of, unique ways to solve our problems in the lab that work at very small scale when money is no object. But we firmly believe that you need to be investing in technologies that are somehow, better, faster, or cheaper than alternatives that are out there. And I firmly believe we can do this, but we have to find these, it takes work, and it takes the mindset of looking with this framework in mind, that it doesn't work just to find some other alternative that could possibly work, that it needs to be, again, better, faster, or cheaper. But yeah, I'll say US, if we look at climate finance and standing where we are in the US, I would definitely say one of our challenges is absolutely uncertainty. We have so much uncertainty, and we've had this uncertainty for the last, years, it seems. It's very difficult for investors to make decisions when you don't know what it's going to look like in the future. And that is one of our biggest challenges. We invest very early. We invest at the pre-seed or seed stage and companies. And so, exits and projects are pretty far out in the future and not in we don't have to worry about them quite so much. But as our companies mature and as our companies get closer to commercial technologies and commercial implementations, that business uncertainty. And even if you win a grant now, you don't always know. It's like, what are the conditions going to be later? Will the grant still be there? Will those tax credits you factored into the model, are they still going to be there? It makes it difficult to make these investment decisions.
Sure. Maybe David Carlin, from what he saw at the UN and associated with risk, might have some ideas as to what the globe is seeing as some of the worst problems, and see if we have some solutions here in the companies people invest in.
Yeah, I think we're at a critical moment from a climate standpoint. Not only have we surpassed the 1.5 degree Celsius threshold that we had been talking about for years in the Paris Agreement, we're seeing unprecedented destruction in places like Los Angeles due to climate enhanced events. I like to talk about those instead of, is it climate, is it not? Climate really is a multiplier of the challenges we face. And so when it comes to financing climate, when it comes to recognizing that the places that are most vulnerable, the places also that have the biggest barriers to decarbonization, are often the ones that are presently the least investable. So how do we put the pieces together to say, yes, it's great, there's a transition happening. We're currently seeing clean energy investment growing around 20% year on year. It was about $2 trillion last year. However, that's still about 3 times short of what organizations like Bloomberg and others say it needs to be to get onto the pathway we need. So part of that isn't just wringing out, blood from a stone, but really thinking about what the investment case is and how to make that case by bringing together the right groups of investors, the right groups of projects, and doing this in a way that's systematic. It's great to see news stories about rhino bonds and debt for nature swaps, but all of that stuff shows how bespoke it is. We need this to be as boring as the mortgage you get on your home. And I think that part of this is using technology effectively to generate the types of frameworks, the types of deals we actually need. Otherwise, I think what we'll do is create more frameworks, we'll create more discussion, and the climate will continue to warm, the challenges will continue to mount, and we're just going to find that harder and harder.
Thank you. Amanda Simonson.
Yeah, and to continue what David just said, I think it's a matter of combining the ESG mindset with the relevant data to support that mindset, right? So once you have like a baseline for constructing your data, a methodology for constructing your data, you can actually gain very good insights from that. And there in the data and in the sustainability analytics, you of course need to withdraw some conclusions for risk management, but you also need to develop strategies for growth and for resilience. And this is here, it's so important because you can actually capture the return on investment here in the companies if you are able to link the line items in the financial statement to what will be the risk for the company, and also what are the impacts from the company, and how does the value chain look like. So that would be the best case if you can actually connect those dots.
Very, very interesting. Tarja, you wanted to speak on that as well?
Yeah, I appreciate what you two were mentioning, that actually all of the three of you, because I consider finance, on the other hand, not just the tool for profit, it's a tool for progress. So if you consider this fact, what you all were mentioning, I think it has a huge potential to drive this innovation and scale solutions, and also fund the transition to the actions to enhance the well-being of the whole society. Also in terms of how we think about the return of the investment, we have to think that in a more larger expansion of kind of like including both the financial return and also for the environmental and social impact. For example, if you think of the lower emissions, resource efficiency, and of course the improved climate resilience, they add value to the investments. And the combination of the public and private capital can really attract more significant investment to project, and of course then adding value also to the whole society. And I think this is one of the key elements to long-term value, which is they may take longer, those investments to mature, but of course they're more resilient to the market volatility and regulatory changes also. So
Sure. Tying into those three things, I'm curious, a question to some of the funds here. Are the LPs in the funds all ROI focused, and they see these opportunities as just capital appreciation, or are they doing it for the good of the world? And there's some, maybe like altruistic adjusted ROI that you tend to find in your LPs. Dr. Maria?
Sorry, if I may, can I add something about the challenges?
Sure.
Okay, thank you. I think the climate finance is at an inflection point. In one hand, we see the growing demand for investments in green technologies, renewable energy, and sustainable projects that could be at the high speed. On the other hand, there are challenges such as long-term returns, indebtedness of developing countries, and the tension with the fiduciary responsibilities. And I think one of the main challenges is to align the interests and the deadlines. While the private sector seeks maybe a quick financial returns, the government needs to prioritize the social and environmental impacts. But however, initiatives such as public-private partnerships can help bridge these divergence. And one point that I think one of the main challenges for the government is to align the different time horizons between short-term economic interests and long-term climate goals. While investors seek quick returns, as I said, climate policies require a substantial investments with benefits that accrue over decades, maybe. And to overcome this, the government can promote, I think, public-private partnerships, allowing the private sector to enter into projects with greater security. In Brazil, programs like Amazon Fund, for example, are show how we can balance these different interests. The Amazon Fund is one of the largest environmental conservation funds in the world, financed by donors such as Norway, Germany, and also the oil Brazilian company Petrobras. And it promotes projects that combat deforestation and encourage the sustainable use of the forests. And the relevance of this project, it shows how international partnerships with support from the Brazilian government can channel resources to climate and initiatives. I just would like to highlight the importance of the collaboration between the government or the public sector and the private sector. Thank you.
Oh, that's fantastic. August?
All right, so I'm going to answer your question. So we're a family office. We don't have LPs ourselves because that's how the family office works. But we work with a lot of other family offices, some informally and some we actually formally advise to help them on their climate investment strategy. Where I work and the people I'm working with and the deals I'm talking with and the people I'm talking with every day, the doing something good for the climate is like the table stakes. Like we are only looking at investments that are going to have a positive impact on the climate. That is our, like, if it doesn't fit that criteria, we're not interested. But then, as I think I said at the beginning, we absolutely believe you can have market returns investing in the sector if you know what you're doing and if you pick the right companies and if you can negotiate the right terms. We absolutely believe that you can make market returns investing in companies that have a climate benefit. I've been investing in this space for like 20 years, since well before we called it climate, like before clean tech, when we talked about energy, and my partner has been investing for like twice as long. So, you know, we firmly believe that with the right skill, right experience, and right ability to pick the right investments, it's not an either or. There doesn't have to be a trade-off, that you can invest in companies doing good things for the world and make a return as well. The one thing I'm going to say is you need to be patient. Maria, I heard you say several times, quick return. There's no quick return in climate. It's a long game, but you can absolutely make positive returns.
Mm-hmm. Mm-hmm. Thank you. David?
Yeah, I would say that, you know, in some ways, both of those things are definitely true, that there's a need for projects and, you know, activities that create impact, but there's also a recognition that I think in many cases the parameters that certain investors are looking for may not necessarily be met by a lot of these projects. And so for a particular sector, you may see that the greener option is not going to be as cost competitive. In others, it already is the advantageous one. And so I really try to advise clients to really think about, as they're trying to raise money for their projects, to think about what the blockers are. Sometimes that blocker is a time dimension. If you need a quick profit, in many cases, some of these may not be suitable. In other cases, it may be deal size. We can look at really niche deals, but that might not work. If you're an institutional investor, the diligence will become prohibitive on the cost side. It might be on the risk profile. This could be great returns, but it's also risky because of the political risk or currency risk. And so part of this is realizing within the financial system, we really do have many of the key pieces together to make this stuff happen, but we need to bring them together correctly. So what role does patient capital play? Well, an important role. What role does concessionary capital from the public sector play? What role do entrepreneurs and those who want to take the big risks, where do they play? But I think deal assembly is not one or the other. When you have deals that are only one type, they tend to be a bit smaller, a bit more niche. But as you really look at replicating this, it tends to come down also to not just what one investor likes, but really how do you give people the right pieces that meet, to use that term, you know, from a financial advisor standpoint, that meet the suitability of what they're looking for.
Melrose Wild?
Hey, everybody. So my business is to work with LPs and co-GPs and to discuss their opportunity in these style of investments. And I'm also a fiduciary to investors with my Series 66 as well. So in these conversations with investors, I think it's really important that we do set a timeline and that we, in these altruistic, driven investments, not donations, it's really important that we understand what the LPs are going through, right? It's important to invest in carbon, but and climate, but if those people aren't suffering from one of the most recent devastations, be it Asheville or LA, it almost becomes difficult for them to identify in their brains the urgency, because they're coming out of a pandemic, financing multiple world wars, and the looming threat of recession. So you can only get so much brain capacity out of an LP to discuss climate, right? So when we work closely with climate groups, we have a group called Recapture Carbon. They work with circular agroforestry. We almost have to set the scene, right? We've chopped down all the forests in Indonesia. The Amazon is being decimated for cattle, which, as we all know now, animals are a great way to spread disease around our planet. There are things that are touching us that we can relate to as LPs. But at the end of the day, we really need to know which LPs we're targeting to invest. So working with family offices that invest specifically in climate, that's a great place for an LP to hang out. If you're trying to convince a family office that's investing in AI, they're perpetuating the issue, right? They're creating data centers that are draining energy and causing fires. So you have to know your target. You have to know who you're working with. We found that one of the best mechanisms to let LPs test out investing in altruistic investments without de-risking the threat to their portfolio with their current placement in alternatives is using a DAF. So a DAF is a donor advised fund. Many people falsely believe that a DAF cannot make LP investments. We work with a group called LOHAS. They're a partner of ours. They actually allow our family offices and LPs that we work with to create a DAF and invest as an LP. Now, those distributions that go back into the DAF, they don't ever transfer personally to that person, but they do generate a growth that can continue to invest in other ideas. So we've started to work with some really unique ideas that people have long believed and fought with us on the fact that they can't invest there, and said, if you want to de-risk this investment and you love what they're doing, why don't you try it through this mechanism? And we're having a lot of success with that. I think charitable tax advantage funding in the climate space makes a lot of sense. And I think we're going to see more and more and more of that as the great wealth transfer occurs. So those are some of our ideas, but I also think you have to really understand the mind of the LP that you're talking to.
Right. Amazing answers. Thank you. Tarja Wicklund.
Thank you, Melrose. I resonate very well what you were talking about, because I think it's really important to understand the mindset of the people you work with. And also we have to remember, after all, business is for profit. So it has to still create the profits, otherwise it doesn't sustain. So I think you raised up an important point of understanding this. And I also see a lot of pitches. I see pitches with kind of like that are divided into two sections. So that's just for profit, and then there's the climate action. So I think that we need to kind of like combine them. There's a lot of potential for the long term, like if you think of the solar panels. I would like to see a pitch where somebody also takes care of the recycling phase, which is also a business. So because we tend to do the project and then we end up there. But to create this long-term vision, what Dr. Maria and Melrose also and all of you were referring to, I think it's really important. There's a lot of potential for business as well.
Thank you. I have a question that's quite personal to me. Here in Puerto Rico, the people working in climate are doing very simple stuff, trying to get food self-sovereign, trying to look at renewables for the power grid, since we're largely powered by fossil fuels still. So I'm curious what individuals have seen in between developed and developing markets, the differences there, what countries or what opportunities lie, and anything people are locating. Maybe Dr. Maria could go more in detail to the problem, since she's so close to that. Oh, you're muted, Doctor.
Thank you
Oh, muted again.
Sorry, I don't know. Sorry, I'm mute, and then they, and then
Oh my goodness. Maybe someone else could jump in.
I think one thing that we could talk about is rewarding is like this concept of prevention as an alternative investment. You know, the Congo is a unique topic, I think, for many people in climate because they're really our last lung, you know, and having this place that's so politically unstable that we can't get industry in there to chop down their rainforest has actually been a really good thing. But if the Congo goes, we might as well just like all party because it's over, right? So at the end of the day, I think coming up with alternative investments where we can almost reward unstable and emerging markets for preservation and not developing in a way that mimics this great decline that we're looking at with our natural resources. I think that we can look at those types of prevention, like what's the cost in the future if we lose the Congo's rainforest versus some of these other investments that we make. It might be more valuable to pay them to not anything that a developer would pay them, right? Pay them to not cut it down because we can't lose that final lung of our planet. I think that's an interesting concept for developing markets. And even the word developing market is really interesting, right? Because how are they developing? Are they going to mimic these issues, these systemic failures that we've created in the West, or are we going to actually empower them to build cities, which they need to build, but in a much more sustainable way?
Mm-hmm. Yeah, it's upsetting, right? The countries on the other end had an advantage of just utilizing all the natural resources in front of them, and it's not
right. And at what point do we look at a country's natural resources, like in Africa, and we say, okay, we have to have all this material to continue on the technology development, but the technology is actually killing us. I mean, Houston's the energy center of the world, and they're rationing their energy. I mean, we've got major issues here in the West that I really, you know, if we start seeing them in emerging and developing places, we are in very big trouble, like trouble no one can even imagine, really.
Yeah. Dr. Maria, were you able to get it?
sorry, I have some unstable here. Sorry, I don't know what happened. I'd like to add that the government can play an essential role in creating conditions to encourage private investments in climate initiatives. This year is the year of the COP30, and we will have a lot of opportunities to discuss that. In Brazil, we are really excited about that. And in Brazil, we use some mechanisms such as taxes, incentives, and renewable energy auctions. And in addition, we are working on policies such as the regulation of carbon market, which already exists in many countries, but only this year we managed to approve it here. I mean, the last year. And this is also help to drive market and give investors the confidence to commit long-term capital to sustainable projects. And I completely agree with Dr. Tarja that we have a lot of opportunity to we have a lot of opportunity to invest in different markets, and especially regarding to recycling industry. That's something that really that I'm really worried about, especially regarding to critical minerals, for example, when we talking about the batteries in different kind of batteries. So thank you very much, and sorry for the unstable connection here. I could not hear well, and then I had a problem with my mic.
David, being part of the United Nations, do you have anything to add to this?
Yeah, I think there's a critical role and has been for a long time for public sector finance, as well as regulation and global policy setting to create the enabling environment for these financial developments. I think without that, it's really hard, especially in emerging markets, for various investors to both gain the comfort, but also have the incentives, because it may be not an area that they have data or expertise in. It may not match their risk profile. All of those kind of limiting reasons that I had mentioned before. And I think that there's a really key role for saying there's a positive feedback loop that comes from really funding the things that are going to support development, are going to support resilience, and beginning to see that no longer as a cost, but as an opportunity. These things have to be done. How do we begin to monetize them, and how do we build them in ways, one, that will save us money in the future, but two, that will end up adding value overall? And I think that that's where there's huge opportunity. I think about it, from almost a real estate perspective. If you imagine a neighborhood where you're seeing major inflows of people, you're seeing increase in wealth, you're seeing high demand, you say, oh, well, that's probably a neighborhood I want to buy in. When you look at emerging economies, that is very much the area that you see on the energy side. You're seeing increasing energy demand, you're seeing increasing financial flows, you're seeing increasing demand from all of those things. And so as a result, energy that you're going to build there is going to get used. Obviously, that will be the case with fossil fuels, but we don't want to have that same problem, that same mistake that we've made before. And I think a lot of the work from the UN and others is really trying to reckon with the fact that others have gone before, have used up that space. And the answer now is not to say, hey, well, let's have everyone be equally unproductive in terms of how we get the energy, but rather, hey, if we want you to do something that we didn't do, how are we going to make that financially worthwhile? And I think that's where the governments, especially in the global north, have a real role to play and have a real responsibility to play, not only because it helps their interests economically, but because there's a real moral argument that if you're going to ask somebody to do something differently, the only way they're going to do that is if you're able to make it neutral for them, at least on the cost basis.
August?
Well, the last two of you both were talking about we need to do things differently. And Maria, you mentioned specifically critical minerals, and that's definitely something that we are actively looking at. Again, we're really early stage. We're looking at developing new technologies, and just take copper, for example. The projections are that for this electrification that we're all talking about, and EVs and batteries and all of these things, we're going to need mine as much copper in the next 10 years as we have forever. That's not exactly right, but it's the orders of magnitude that we need. We have so many minerals that we will need to do this electrification that we've been talking about, and we clearly cannot continue the practices for mining these minerals that we've used in the past. Clearly, we must come up with better ways, because we can't just keep creating these huge gashes in our earth where we're destroying mountains and just polluting the water. We have to come up with other methods. So that's one of the places that we are spending our time looking at. How can we find and invest in companies that are developing, more sustainable, kinder, gentler ways to extract these minerals? One of our investments is in a company called Alta Technologies, and they are using biological methods to separate rare earths and other minerals. And if right now, these processes are done mostly in China with very polluting, toxic chemicals that require that you can't even build these facilities in the US and in Europe because of all the chemicals and the hazards involved. And so our investment in this company is instead using a very, safe, and we expect it to be cheaper way to use synthetic biology to do the same separations process. So that's an example of the type of ways that we are looking to, if we need these minerals, if we need these materials for these better purposes, for the electrification, to improve the climate and improve the air, how can we do this more sustainably? How can we do this more kind?
Melrose, you wanted to comment on that?
Yeah, I think to that point, it's interesting because we really need to reward and encourage innovation. And if everybody goes into banking and legal and all of these, professional services that make us a stable life for our families, but don't innovate, then we have a major issue on our hands. One of the groups that we work with, and I think to that point with minerals and with tying to the electric grid, it's still tied to fossil fuels. So we've got a huge problem with electric. And so one of the groups that we work very closely with is a fusion group, which is inherently way safer than fission. And we they're on their 6th generation machine. Now, they have raised over $1 billion to date. It's largely private investments. You know why? Because it's 100 pages to get a government to give them money, and then they have to deal with bureaucracy around government. So I think the private markets are incredibly important, not only around early stage innovation, for example, with groups like August, but also for these later stage Series H's that we're raising to get these technologies over the finish line so that we can just get everyone off the grid and essentially make energy free and sustainable. I think that this energy and mining situation, yes, it served us, and we need to be grateful for oil and the technologies that got us to the civilization that we find ourselves in. But if we continue to pour investment into those types of technologies and solutions, we just have more of the same problem. So I think strong innovation and getting innovation over the finish line, into the technologies that actually service humanity, those altruistic investments, I mean, they're very important, but we only have, so many families that can pour in hundreds of millions of dollars and hundreds of billions of dollars into those technologies. So we need to create vehicles where we can do Series A's and have the public participate in innovative technologies at the later stage.
Yeah. That vision would be fantastic.
Because the governments make it way too difficult. And I think governments also need to lighten up a little bit. They need to start realizing that these groups can get the money from private funding, but the government actually should be participating in these technologies at these critical later stages, instead of making groups like us go out and beg investors to put altruistic money into things that are going to save humanity when the government is the one draining most of the resources.
Right. Amanda?
Yeah, thank you. And I actually do agree with Melrose on this. But also I want to put a comment on the macro political situation that are also confusing the investment and how to mobilize capital, how to transition the finance. How do we move from classical finance into like transition finance and then sustainable finance? That is the aim of the EU Green New Deal, right? When we see that Donald Trump, he's pulling out from the Paris Agreement, that will of course confuse the discussion on how should we actually transition finance and what is the beliefs behind transitioning finance, right? And then at the same time, we do also see how banks are pulling out of greening society, net zero alliances. And that is also a problem when we at the same time do see insurance companies increasing the price of insurance, especially in fact of climate change. So we will also have a pretty stressed situation in the future where we will see the insurance companies raising the prices, which will of course affect the investments, but also asset depreciation for that instance. And that is quite interesting if we look at how the companies then will take that into consideration when they are doing the balance sheet. And I think the whole holistic and the synergy of how the ecosystem works together, that will be important, especially when we are going into a situation where we do not only deal with climate crisis, we're also dealing with a social crisis and biodiversity crisis for that instance.
Tarja?
Yes, thank you. I agree what Amanda was talking about, because the transition is important, as Maria was pointing out. Those two collaborations with the public-private financing is really important, the sustainability, because you see sometimes that companies start investing, for example, what August was referring to, the mining. Like now it's done in China, it's polluting a lot. But then in the Western countries, you see mining companies trying to develop something new, but meanwhile they're developing it, the regulations change. So there is also sustainability in terms of the regulations required from the public authorities, so that the companies who really do the investments really have the reliability in this. I just was thinking about that because it just came to my mind, because we had a case like that, and it's very frustrating for also the investors, because they invest in this and then all of a sudden the regulation changes or the government changes and then everything is again on zero.
Yeah, what I'm getting is whether it's developed, it's sort of the same solution. You need you need sovereign funds to step in, just due to the long tail investments, the long tail investment nature. You need something that has, a 20, 30, 40-year mindset. We saw with solar panels, right? Amazing subsidies, and over a long period of time, the efficiencies improve. In this last bit, I'd really like for everybody to highlight a company that they see making, great impact in the world right now. Maybe it's one of your guys' investments, something starting up or something that's been around for a while. But I'd really like to hear, individual companies you guys see and what they're up to. Anyone who wants to.
Well, investors love to talk about our portfolio companies. How much time do we have? Which one should we talk about first?
You only get one.
Oh, that's the problem. Which one to talk about? Only one. I'll tell you about our most recent investment that we've just recently made, and we're actually in the process of closing the seed round still. Somebody mentioned AI and the growth of AI and the growth of data centers and some really scary numbers that we're seeing about how much increased electricity it's going to take to power AI so that kids can not type their papers and instead get it from ChatGPT or all these ways that AI is going to change the world. So one of the companies that we just recently invested in is called Fervoret. And what they are doing is they have a much more efficient way to cool servers that are in data centers. And actually, they actually use, you mentioned nuclear, and they actually use some of the same technology that's used to cool nuclear power plants, which is like the most efficient way to move a large quantity of heat away from a concentrated source as efficiently as possible. So they're using some of that same core kind of thermodynamics, thermohydraulics to cool data centers much more efficiently. Just like the numbers are amazing. It depends on the exact comparisons, but it can be anywhere from saving 20% of energy is a small. It could really save 75% less energy to cool these data centers. And so if we kind of say, okay, AI is probably going to grow, that's probably going to continue to increase the demand. People are going to want more data centers, more servers. So if we're going to do that, we better do it more sustainably. And a way to do that is by being more efficient with the resources that it takes to cool these servers.
Mm-hmm.
That's
I think anyone can see substantial ROI potential there as well.
Oh yeah, that's like I said, you can invest in companies with a positive climate impact and still make money. There is this would be one of them.
Nice.
So I brought up two companies, which I'm happy to just tell you the names of. The fusion company that we're bullish on is TAE.com. They also have a life sciences division. They have over 400 people working there, and they're working on their 6th generation machine. Incredible. I feel incredibly lucky to sit on some of the scientific calls with their groups with investors. Just really gives me a lot of hope that humanity is not going to be tied to a grid forever. And essentially they're recreating the sun and harnessing the power of it. The other company I mentioned was Recapture Carbon, circular agroforestry. Instead of chopping down rainforests and forests, we can just grow trees in a circle and cut them down systemically. We don't need to cut down any more of the rainforest. Very resilient trees and very fast growing. The first project with them is in Argentina, run by some really incredible people that are just really passionate about us maintaining forests and clean air. So I'm really bullish on both of those groups.
Fantastic. Tarja, just because you're up next, have you seen any companies recently you think are making an amazing impact people should look into?
Well, at the moment, I was thinking about our own country. In Finland, we have a huge data center in Hamina, which is at the sea, which is going to the same, what August was referring to. The extra heat is used for the heating up the houses, and the electricity they are using and consuming is going to be 100% carbon neutral. So I think it's a great example of what can be done within one project that requires a lot of energy, but also can be used in creating value to the whole community around it.
Amanda?
Yeah, sorry, I was muted. Actually, I do not have any company that stands out, but I do see some very great progress in the textile industry. As a consultant, we're in touch with a lot of different sectors, and especially the textile industry are improving, especially in terms of human rights and the social due diligence, but also in terms of making these digital product paths, making sure that they are lowering the GHG emissions, both in terms of the production size, but also in terms of the production. Actually, one piece of clothing can be like in around 12 or 14 different countries before it's sold. And by creating these digital product paths, which is mandatory in the EU also, they are actually having much more traceability and transparency into the value chain of the textile and the clothing. And that is a big improvement, but also a big victory for the textile industry itself.
David, anything you're looking at or looking into?
Yeah, so I mean, I'm an angel investor in a number of fairly early stage companies, as well as an advisor to some of them. On the data side, I think, you know, Climate X is doing some really great work helping institutions measure and manage their climate risks. Another one that I really like is Climate Aligned, and they're working on helping equity and debt analysts look at various securities and understand how aligned they are to various green frameworks. So really trying to embed impact within the actual issuances themselves. So I think, you know, those are, to me, you know, uses of technology to stretch our vision, our understanding, and improve processes. Because as I said, we need to do this fast. We may not get a return fast, but we need, you know, action quickly. So those are, you know, definitely two that I would, you know, mention amongst many others.
Sure. And Dr. Maria?
Thank you very much. I just like to say that I was in the first conference on energy and AI organized by International Energy Agency. And in this context, I'd like to say about SERPRO, that's is the biggest public IT organization in Brazil. I think is the biggest in Latin America, and this organization, it's a very positive in terms of efficiency, energy efficiency, and the company has implemented a sustainable practices such as optimizing the data center operations and adopting renewable energy sources. So I think it's the one of the examples that I'm just thinking about here now. So thank you.
Thank you, Dr. Melrose. You wanted to add something?
Yeah, one thing I just wanted to bring up is that, you know, with this new administration coming in, I think there's a lot of fear, right? And I think we just also need to be really honest about the fact that about 3,000 US companies, many that are mid-market capitalized companies, they are subject to the CSRD. So while we do need to pay attention to innovation and emerging companies, we also really should globally pay attention to the American mid-cap companies that are staying in line with the CSRD and are actually outperforming the companies that drop their ESG alignment. I think that those companies are going to outperform, and I think we can be really grateful in the US for those European stricter regulations to guide us in this administration, when obviously many companies are going to drop that thesis. The ones that are subject to the EU regulations, it's important we pay attention to the ones that are doing a great job and outperforming by being closely aligned with the guidelines for staying conscious in this time.
Mm-hmm. And I think it's a common theme throughout all of this. There needs to be more sovereign investment. There needs to be more privatized investment. Some of that may become more difficult just with the changing of tides that we've seen with new administration and so forth.
Well, it's also the individual's responsibility. I was a wealth manager at Merrill Lynch. The large wirehouses, the advisors are not paid to show their clients investments, and wirehouse advisors are not allowed to show. It's a FINRA rule that you're selling away if you show alternative investments to your clients. So it really is the individual investors to go out and find a group or an investor or an RIA to manage their alternatives portfolio, especially in recession primed times, to invest in groups, join up with other family offices and that are investing in the space like August, and actually follow suit if this is something that interests you. Your wirehouse financial advisors and wealth managers are not able, they're literally banned. Their hands are tied from showing you these things unless they're on the platforms. So the wirehouses need to be incentivized to include these and go put these companies through the due diligence to keep them on their platform. And with this administration, they are not going to do that. So it's really important that the individual investors who are interested in climate financing are going out and actively finding family offices and other groups and RIAs that have these things on their platform that have been through the due diligence so that they can invest in them, because you're not going to get them at the wirehouses.
And that know what they're doing, because that's sometimes where I sit, I see investments that are made in climate companies. I'm like,
yeah, the wirehouse,
those were not the right ones.
They're not the right ones. We're talking about an old boys club, so you have to be very careful with the companies that get through a larger institution's platform. I strongly recommend finding a family office. Like if you've been investing in this space for 20 years, that's a really great person to piggyback if you like early stage climate investments on, because they're doing their due diligence. They're saying no to hundreds, if not thousands of deals a year, versus going out and talking to your friend who has an idea and investing in them. I'm not saying you shouldn't do that, but I'm also saying if you want to invest in this space, you're not going to get it from your advisors. So it's important as an individual that you educate yourself, you find what you're curious about. And I would piggyback on family offices and ask to join those groups, because they've already got the mechanisms in place to do it in a safe and de-risked way.
Rose, that was awesome. Yeah.
I'm sending my LPs over to you. It's frustrating. We can only focus on so many things. I'm bullish on permaculture because I like designing permaculture land, right? And I like that a lot, but I also recognize there is going to be no land to develop if we don't have climate under control.
Yeah.
Amazing call to action. Anyone else have a call to action for either of these investor groups? Why they should move past the barriers to entry, just to finish this up.
I'm just going to repeat what I said before. It is not an either or. It doesn't have to be. These are not your philanthropic dollars. You can do the donor advice fund. That's awesome. I hadn't heard of that. But you can actually invest in companies doing good things for the climate and still make a return, because we know that the companies that are actually going to be successful are the ones that do something better, faster, cheaper. They're not they're not the ones that are going to require a green premium. There are ways to do good things for the climate and do it profitably. And we do that, and we do help some other family offices to do that as well.
Tarja.
Thank you, August, for the great finishing, because I think it's the perfect way of combining this, because it's not either or, it's inclusive. So it can be done and it can be profitable also. So thank you.
Great. I would like to thank all of our panelists from Davos Worldwide. Appreciate it so much. It's been great for me to observe you guys work through all of this, and I think we got to some points I will take with me, and I'm sure our viewers will for a while. Thank you all. Have a good day.
Thanks so much.
Thank you.